So thank you everyone for joining us today. Just some basic housekeeping before I start an introduction. Let's all please have our microphones on mute for the first part of this webinar. And once we start making it a little more interactive, is when you can unmute and ask your questions and participate in the conversation. Correct? Just some hygiene apart from this in the way the event will flow is that our speaker Jinesh Gopani will first begin with a 10 to 12 minute introduction house view, on the house view from Axis Mutual Fund. Post that, we will open it up for a Q&A with all of you. You all will all notice on Zoom that there is a chat window, and y'all can actually start putting in your questions over there. I know some of you had already sent us questions, and we will take those up as well. But if there are fresh questions, or if you want to reiterate your question, you can please key it into the chat window, and we will put it forth to Jinesh. So on that note, let me begin. The reason that we are doing these sessions for our investors and for some of our founders who've joined in as well is to actually decode what is happening in the markets, both public and private globally. Correct? It's a time of uncertainty. There's a global health crisis, there's a global economic crisis, and they're both dovetailing each other, right? How do you decode that? How do you preserve your wealth, possibly even and possibly even grow it in a time like this? That is what we are going to try and decode for you here today. And we have with us Jinesh Gopani. Jinesh, interestingly, started his journey at Axis about 10 years back, over 10 years back, right? So I think when he was starting his journey at Axis, probably just off the global financial crisis, right, in 2008, 9, 10. And here we are, 10 years down the line, on another impending crisis. So on that note, Jinesh, I'm going to hand it over to you. Please share with us your experiences, talk to us about your house view, and then, like I said, we'll open it up for a Q&A.
Good evening, friends, and thanks to Let's Venture to having me on this Zoom meeting call. Obviously, you guys know that what's happening globally, and I will not delve more into the negative part of the story. Every day there are so many WhatsApp calls, there are so many WhatsApp videos which are roaming around. So obviously there is a lot of negativity around, and it is rightly so, because this crisis is more of a health crisis, and it has taken the entire globe under stress, which had led to economic crisis. The unfortunate part is the developed world, which is Europe and US, has gone into a further significant problem as compared to Asia. So to that extent, there is a problem of health crisis across the world, and all economies are grappling with how to take care of this problem, and again how to re-inflate the economy as and when the problem gets over. In this entire mess of health crisis and economic crisis, you have a problem of financial crisis. So last 10 days, if you see the way markets were rogered across the globe, is only because of the fear of global financial crisis, which might come in case the liquidity part of the money gets jammed. The good part, at least for now, last 4 days, what we are seeing is US has gone for unlimited QE after seeing lessons of what happened in a global financial crisis. There is a fear that if any of the hedge funds or any other entity goes down because of the liquidity issue, then it can have a significant financial contagion impact across the globe. And hence you saw some amount of recovery also for all markets, also for India. So Indian markets were down close to 30-35% from its peak. They recovered in last 2-3 days thanks to this unlimited QE announcement, which has led to assumption that the financial crisis will not come. There might be instability in short term, but the liquidity jam fear has gone away, and that is leading to thinking that with so much money sloshing around, emerging markets will again find its way in terms of inflows. However, the volatility will be your friend. Markets are going to be topsy turvy for certain period of time, and as you see, India is just in the phase, one of the most critical phase of this epidemic, and if we are able to come out of this mess in next 2 months or 3 months without significant casualties, then I think we should be through, and maybe in next 6 to 9 months, you will see economy coming back to normalcy. Obviously, government is cognizant of that fact, and it is an unprecedented move to stop the trains, to stop public transport across India, and hence the fear of contagion spreading in terms of stage 3 of this epidemic hopefully should be less. The critical point, what we are just tracking is the casualties. Obviously, the death rate is more important than the cases. Cases will go up, and as you are into this critical phase of next 10 days, the expectation is that the cases might double every 3 or 4 days, and hopefully by 5th of April, cases should start tapering off. But the more critical aspect, if the casualties or the death rates are less, then I think uh, we can avoid the catastrophe, and things can come back to normalcy faster than the expectation. So this is, it's a turbulent time. It is difficult time. The good part is you are getting some of the best stories in the market. At least I can talk about public markets. Let's Venture is more into private, but I think across the private market or the public market, you are getting some of the great stories. I'm sure would be at a lower valuation as compared to what it was, let's say, 15-20 days back, and that gives a great time to invest with a 3 to 5 year view. So basically, from a strategy perspective, be it a private or the public money, public investments, I think if you are into the businesses where there is a right to win for that business model for next 3 to 5 years, they will make disproportionate amount of money. However, the caveat is if you are able to come out of this catastrophe in 2 months' time with lower casualties. Uh, uh, to that extent, I think even the public markets are in a process of stabilizing, maybe around this levels or maybe 5% higher, 5% lower, depending on how the global market moves. But you are seeing signs of stability, hopefully coming around in next 10-15 days. Let me just touch upon case of some of the Asian economies like uh, uh, Taiwan or Singapore, or even for that matter China, and also Japan. I think they have been able to manage the show during this health crisis pretty well. And if as India also comes out of it, then I think Asia, in terms of money coming into Asia, will be humongous, because Europe will be a gone case. It will take long time for them to come out of this mess, and USA will have to see how they are able to manage the issue in next 10-15 days. So obviously, India can also be a critical turning point if we are able to manage the casualties much lower than the expectation of the economist or any of the other experts. However, keeping fingers crossed, you are in turbulent times. You are getting opportunities to participate. We are, as an advisor to some of our other clients or the channel partners, we have been telling them to do daily SIP in terms of investment into the funds, so that you don't miss the upside as well as the downside for next 2 to 3 months. Saina, this is it from my side. Happy to take more questions and understand what are the concerns.
Thank you, Janesh. So, because we are calling this the Let's Venture Silver Linings Playbook, the one silver lining is that some very, very good stocks in our public markets are available at good discounts. And if you have the liquidity, it's a good time to buy them. That's one silver lining. What is the other silver lining that perhaps we can see from a downturn or a sort of correction of this scale, right? Just from a more fundamental business point of view, how do you think businesses will absorb this and come out stronger? Is there a silver lining there too?
See, obviously, some of the companies who are cash rich companies or who have a strong funding line, I think, and if they have a business model which really comes out of it in a much, much better manner, then those companies will become disproportionate winners. So, be it a private or a public enterprise, if the business model is strong and if they are uh, uh, able to scale up in this environment, then I think normally you would have seen that all the crisis brings new business models and new entrepreneurs. So obviously, if you really see the way technology is helping us now to connect ourselves through Zoom, you see the Zoom stock prices have just flare up. So out of nowhere, Zoom has become one of the best engine in terms of connectivity. So I think there will be many business models which will get innovated now. People will realize the importance of that business model, be it e-commerce or any other digital platform as well. And the way you are working will change dramatically. So some of the sectors will take time, like tourism or hospitality sector. However, some of the digital-led sectors will gain significant traction.
All right. So there are some questions that have come in, Janesh. So I'm going to go to those. One question from Yash Podar. I'm just going to quickly read it out. At this point of time, if one has to reshuffle their portfolio, how would you reallocate? Are you seeing a flight to safety towards mega caps again?
Yeah, so my advice always has been to be into multi-cap kind of a strategy where you have a best of both worlds. So large caps are clear leaders in their space and they help you during downturn. And the mid cap and the small cap, which are innovative in nature, who have significant leadership position in their business model, becomes disproportionate strong in this environment. So multi-cap as a strategy, we have been telling our all the channel partners because there are turbulent times. You don't know which sector or which theme gets distorted in this violent moves.
Right. So on the question of themes, right, there's a question from Abhishek. Are pharma and PSU dividend yield sectors good for investment now? I know I'm going to just actually put out a housekeeping that Janesh cannot talk about stocks in specific, but this is a sector call. So Janesh, if you'd like to weigh in over here.
See, clearly at this juncture, the way it looks like companies which are rich in cash, so whatever the balance sheet is strong, will flourish as of now. Flourish in the meaning they are able to manage the salary levels of the employees. They are able to manage the overall business model or the balance sheet in a better manner. So let's say consumer staples, pharma, technology piece, and also some part of banking sector. Top banks should do very well in this environment. However, some of the sectors which I just said, the tourism related, any sector like hospitality, aviation, maybe cinema hall type companies will take a longer time to come back, and in fact, uh, we might see a change in some of the business models in itself. So as of now, these are the sectors where we feel that it is good to park money because they will come out as a winner in terms of business models.
Okay. There's a question on the banking sector, and I think it's useful. I see two, three of those in the similar lines. What is your view on banks and the NPA situation? Are you expected, and what possible frauds that have been papered over? How will banks manage delinquencies that might rise? And therefore, what is your view on the banking and NBFC sector?
See, I think it's an unprecedented crisis, and RBI today came out with significant measures to ensure that the banking sector doesn't go into an asset quality cycle which is bad. Obviously, the banks were coming out of this bad asset quality cycle. The corporate NPAs were coming down. Retail was still doing well. See again, it is about if it is just a 2 month phenomenon, economy opens up, economy gets restored in like in next 6 to 9 months, then I think the impact will be less. But if let's say we get into a problem where there is a lockdown for 3 4 months, there is a significant catastrophe in terms of an epidemic, then I think the problem, though RBI will come out more measures, but generally, then the job opportunities will come down, the job layoffs will happen, and then that is not a good sign from the NPA cycle point of view. So as of now, it's like a demonetization kind of a event. If it is just a 1 month event, you come out of it nicely, and if it is a 3 to 6 month kind of an event, then India is written off.
Sorry, Janesh, can you repeat that? India
Is written off as a story in itself.
as a story in itself. Okay, all right. I think that's an extreme point of view. So on that note, I'm going to actually take a question that had come into us earlier on email. What are the key market data points that, as an investor, I should monitor right now that should guide my investment decisions on deployment or valuation? So some
Yeah.
of those things that you should monitor, right?
Yeah, I think the critical part to monitor, as I said, is the cases. On the health side, is more on the cases and the casualty sides. If that is less as compared to the expectations of the economists or the experts, then people will start looking at India again. And from the valuation perspective, if you see some of the good blue chip names, some of the good companies are available at 30 to 40% discount, and hence again, if it is just a 2 month phenomenon and thing by business is back to normal, people have already discounted next 2 quarters of earnings, so people will start looking beyond that, that how these companies come out as a winner. So obviously there are many names which are available at a decent price, but obviously you have to be careful because there will be ups and downs in the near term. Stocks can go up by 5 10% very fast, so please don't take it with a very short term view that I will buy now and exit in 1 month time. If you are investing now, invest with a 2 to 3 year view at least.
All right. And how closely must one track the global situation, correct? And over here, I'm talking about how foreign institutional investors will deploy or pull out money from India, right? What could impact that, for instance? Because we do know that while our domestic market and our retail investors, it isn't a very deep market, right? A lot of the churn in the stock market that we see today is also dependent on foreign institutional flows. So if you want to talk to us about that and what are some of the data points that are being monitored there? What are you seeing as a trend? Is there something that's emerging there?
See, the good part is after the announcement of unlimited QE, money is going to slosh around in the world. So to that extent, the impact of financial contingent where some of the hedge funds blow out and hence there is a huge liquidity crisis goes away. So obviously, once things settle down for Asia, money will flow in. Obviously, the critical to look for from the developed world is the US economy and market because it's a very thriving big market, and if this epidemic goes to next level in US and if they are not able to control like Europe, then obviously there will be short term pain which can be significant.
All right. And what would be the behavior? I mean, if you want to draw parallels, because I know that's a line of questioning that came in on email to us as well sometime back, which was how does this compare, or are there any parallels to be drawn from 2008 and other previous crises on how institutions might behave this time around?
Yeah, so last 2008-9 crisis, you saw markets coming down by 55 59% in 6 month time, and whatever the QE was announced was in that period, which is 6 month period after the Lehman Brother crisis, and it took 2 years to rebound. Whereas if you see currently global markets as well as Indian markets have rogered in just 20 25 days of trading sessions, and USA has announced anything and everything in terms of QE what they did in during the GFC crisis. So obviously they know they know the importance of the liquidity position in the world, and they would not like to get into a financial contingent when economy itself is into a recession for a shorter period of time. So to that extent, I think uh, if things are better off in next 2 months, then I think overall things will subside down and money will flow back to the respective. So let's say passive money. Last 20 days, you saw massive passive outflows. Can come. This money can come back very fast.
All right. There are a couple of questions on the pharma sector from Anirudh, so I'm going to pick those up. Can you comment on pharma companies with R&D capabilities focusing on APIs, and what impact will there be on these pharma companies that have a focus on exports to the US?
So I think as of now, it is too early to say how US will allow in terms of new A&D approvals and all those things. Obviously, they are grappling with the problem of different nature, different level altogether. Hello, yeah.
Yeah.
So to that extent, I think India has a great capability of API, but obviously we should understand we are also dependent on China for very basic chemicals to manufacture those APIs. So we have great capability. So the some of the companies who are into CRAMS, contract research manufacturing, have done incredibly well in terms of supplying those APIs to the MNC pharma companies across the globe. So we have good credibility, and obviously, when things settle down, we will become much stronger again and become very important partner to the US pharma companies.
All right. Vedanshu had a question. How do you see supply chains changing on a macro level? And could that give a boost to the Indian manufacturing sector?
Yeah, so let's say if this political establishment of India is able to avoid this catastrophe, it can be a significant turning point for Modi and his team to go out in the world and say that we are also equally capable of managing things in a much better manner. So whosoever is looking to shift their operations from China to other globe, India is also a great destination. And obviously, it has to follow with some more steps. They already have announced tax rate cut for them. People were expecting money to come in next 2 3 years from apples of the world. This can fast track very fast if they are able to take some bold steps once this get off.
On a related note, perhaps, and I know you've addressed this to some extent, Janesh, but I'm seeing a couple of questions on these lines. I'm putting it again. How does one try and measure the likely economic shock of the world being completely stalled for 1 to 2 months?
See, I think if it is just 2 month problem, then there is no problem.
Problem.
Everything can be taken care of. But if it is a long drawn problem, then I think the world will go into recession. Already it is into recession at least for 1 quarter or so. But let's take case of China. The way they have, I mean, whatever right wrong, I don't know much about it because whatever reports you get from your friends and all those things. But the way they have opened up the economy, what we hear is like 50-70% of the people have started coming back to office. Obviously, they are still maintaining social distancing and all those measures. The factory productions have started again coming back to 60-70% capacity utilization. If you take case of Taiwan, you have not heard a single problem coming out of that side. So that economy is doing well. Singapore, obviously the cases have gone up, but there are no casualties. So obviously things are taken care of nicely. So I think shouldn't be an issue if it is just a 2 month problem. If it is again same thing, if it is a catastrophe, then we don't know how it will go. Then can there be a recession for 1 or 2 years? Maybe yes. If this is a long drawn process.
Okay. All right. Okay. You can't really trust what comes out of China. You can't really trust what Trump is up to because he put out a tweet, suddenly praising China today, saying that, kudos to what they've done and they hope to work closely with China now. So you don't know where global politics is going, correct? As well, that has an impact too. Uh, Two questions, and I think they're perhaps related, so I'm going to take them together, Janesh. How will brick and mortar retail businesses bounce back after this lockdown? And do you think that the PM's decision for a complete lockdown is something that we should applaud?
So answer second question first. Obviously, it's an unprecedented move. Uh, I'm a neutral to any political establishment, but generally speaking, a person who can take such a decisive action is a great effort to lock down trains, to lock down public transport, and people adhering to it, people listening to him itself is a big thing, I would say. There is a complete lockdown. All chief ministers are behind him. All the entire machinery is behind him. You genuinely don't want catastrophe. You genuinely don't want this health crisis to go to stage three, uh, which political leader would uh, uh, join his hands and request you to stay at home. So I think to that extent, it's a brilliant effort from him. People are still listening to him. In fact, some of the FII friends told me that the global people are zapped with the way 130 crore population is locked down by this PM. So I think it's an unprecedented move. You would have never thought, at least I would have never thought in my lifetime that even the trains can be stopped by this government. So I think it's a great effort. We should all support them. We should not be venturing out saying that nothing will happen to us, because it is for our sake, our benefit, not for the only PM's benefit. Your first question was on the retail cycle, right? See, ultimately, again, as I'm saying, if there are no massive job losses, if if economy comes back to normalcy in 6 months' time, and if job creation accelerates after stimulus from the government, if they take that measures, further measures to stimulate the economy, then I think retail cycle, basically, at the end of the day, uh, the most important part for us is job creation. Uh, till date, despite economy coming down from 7.5 to 4.5, we never had a job losses, I would say. There was no major job growth, but job losses were not there. And thanks to the private funding space, lots and lots of opportunities were coming on their way. So even if, let's say, the listed enterprise were not recruiting, the entire private sector private enterprises were recruiting big time. So let's take Zomatos of the world, or Uber Olas of the world, or anyone like that. So there were no job losses. Money was available in plenty for any entrepreneur to kickstart the businesses, and hence the cycle was going around. If, let's say, there are job losses and if there is a catastrophe, then the retail cycle will take long to come back. Today also, if you see, RBI has put all its efforts to extend the EMIs for another 3 months, which in itself should give significant breathing space to many people who are salaried class, and who have huge home loans or retail loans, that at least for the next 3 months, I don't have to pay any kind of EMI. So by that time, if things recover, then I think retail cycle will be back by Diwali. If not, then you have a bigger problem.
All right, but don't you think, Janesh, we were already in a sort of, I don't know if you'll agree with me over here, but a structural slowdown of sorts, right? The economy was in a slowdown. You mentioned that there was virtually no jobs growth, right? And that's well documented. Having said that, this situation now, at least for the next month of a lockdown, and then perhaps if this was to extend, can actually um, have a very adverse impact, correct? Even if the health crisis we are able to overcome and step out of over a period of time, right? So how does one sort of prepare for this as a business? What are some of the fundamentals that you will be looking for, and kind of targeting towards as you look at various listed entities, and perhaps from there we can take some cues for the private entities as well that you spoke of.
Yeah. So I think first and foremost is the balance sheet. If the balance sheet is strong or no, to at least absorb worst case, let's say, 6 months of pay for all the employees.
Right.
So that would be very critical. So protecting people is more important at this juncture than anything else. Then depending on the sectors, let's say take case of banks or NBFCs, protecting people, protecting capital, protecting asset quality, and protecting the overall balance sheet, I would say liquidity part, is very, very critical at this juncture. Similarly, for many other companies, first is the survival, to ensure that their balance sheet is strong enough to at least help them pay salaries to their employees without any layoff. Obviously, there might not be an wage growth at this juncture, or there might be some kind of a wage, the salary cuts also. But I think if at this juncture any entrepreneur is able to save his employees both from the financial burden and from the health burden, then I think uh, people will stay with those entrepreneurs for a longer period of time, irrespective of the salary cuts announced or not announced. And once 6 month time things come back, those companies with strong balance sheet will get disproportionate share of business also.
Okay. So certain sectors then that, given this, you as a fund are overweight on, given the backlog of, certain sectors that had become, sort of very, very difficult to put further money into. And now given the situation, what are the sectors that you think that there is good opportunity in, and where would you be circumspect?
Yeah. So I think the good opportunity is FMCG, consumption, consumer staples. Obviously, your question would be then valuation, but at this juncture, uh, first and foremost, the most important point is which are the companies who are able to uh, uh, grow, grow as well as protect its own people and balance sheet. So consumer staples are daily need items. Obviously, you would not, even if you are staying at home, you want to consume some bit of it, right? So the growth rates will be, the growth cuts will be lower. Pharma should do well, because of the inherent strength now which will come to them in terms of people going for more health related aspects. Insurance companies, both health insurance as well as life insurance companies, will see significant uptake once this epidemic thing is over. Uh, so these are some of the sectors which should do well at the start of the economy. Technology is more of a defensive play. Obviously, given the state of affairs in developed world like Europe and US, there will be an issue of growth. But given their balance sheet strength, given their ability to pay dividends from their profits, they will become more of a defensive kind of a play if India doesn't come out of the mess in next 2 months. Real estate, hospitality, tourism, all these sectors will see significant change in the behavior of the business model, and it will take slightly longer time than the sectors which I alluded to.
All right. So we have a couple of more questions. Janesh, let's take those. How should one look at asset allocation across listed as well as unlisted space, given the short-term uncertainty and lockdown effects?
Yeah. See, some of the great innovations in India has been happening in the private space.
Yes.
To be very frank, in the listed space, if I want to look at some of the innovative companies, there are very few innovative companies which are available. We are still grappling with same names for last 10, 15 years. And some of the great names which have really made their, so we have, I will just tell you an example. We have how to play this private space. How we are playing is that we have one of the company like Info Edge, who is like a venture capitalist in terms of investment into private space. So I don't have any other play to play, but to invest in Info Edge for my investors, because we are not allowed to participate in the private space. But some of the great innovations,
Mm.
whether you call it a cut paste copy kind of an innovation or a real new innovation on artificial intelligence side, has happened in the private space, given the money available and given the ability of the private equity investors to understand those business models with a longer period of time. So my, if you ask me where I will put my money, I would put my money 50-50.
You put your money 50-50. And at times like this, do you really regret that some of our best e-commerce companies, some of our best technology, AI, B2B SaaS enterprise companies are not listed?
Yeah. So we are so unfortunately we had to launch a fund which was 30% overseas, where we participated in some of the US based companies just to participate in those business models.
So what are some of those business models, Jinesh, that you find attractive that y'all have an allocation to globally, like you mentioned? What are some of those spaces?
No, the same name. So same names like Netflix of the world
Oh,
or something like that. So anything new which is giving convenience to the consumer, anything which is B2C as a model, anything which is helping the companies in terms of improving their productivity scale. These are some of the companies with our JV partners showed us we have invested.
all right. Okay. Another question around the markets, Jinesh. How do you identify whether the markets have bottomed out? And what factors can I look at? Difficult
See,
question.
very,
Yeah.
very tough to say, very tough to say, because all crisis comes with their own positives and negatives. India has been seeing all this kind of doses for last 4 5 years now, starting with demonetization to GST implementation to ILNFS crisis. I think they are all in a way black swan events which are at play, and this is also some kind of a black swan event which are at play. So it is very tough to find the bottom. But obviously, if some of the companies, the thumb rule is if some of the companies, blue chip companies, are available at 30 35% discount, and the business model is here to stay for next 10 15 20 years, then start nibbling around.
All right. But the market itself, I think you can't call the bottom, right? Because of,
No,
yeah, it's
no,
difficult to call the bottom.
see,
Yeah.
it's
Even
difficult. So
at
people, when there is a pessimism, people were talking about index going down further by 30 40%, and suddenly index rose 20 10 15%. So volatility will be there, but once you see stabilization in the market breadth coming down, you will see that time people trying to. So what we are seeing now is already after the measures announced by the government in terms of lockdown,
Hmm.
there is a hope that India will also come out from this mess nicely, and we are seeing some of the FII long only money started to nibble around, and we have also been participating in last 5 6 days, slowly steadily. So I think at 30 35% discount to in terms of stock prices, I think there is an opportunity to start venturing into. Obviously, the risk is if we explore.
All right. On a related point, Jinesh, because you spoke about nibbling around in the small and mid cap space, and unfortunately, that's the only barometer that perhaps we can use to, align in the private market space to smaller technology or smaller, even consumer-related businesses in the private space. What are some of the fundamentals that you look for in small and mid cap companies when you're looking at making an allocation?
So the most important thing is to understand the promoter well, or the professional who is running the show well. See, in India or maybe even global, if you go right in the assessment of the promoter or the professional and his vision and thinking, and if he is able to make you understand that what really this business model can scale to, then I think there are many great experiences or stories to look for. So promoter for us is the most important part. Promoter or a professional management, whichever may you may say. If he has a vision, if he has an ability to think in Indian context, the same business model which is in China or which is somewhere else, then I think those are I would say that would be the first critical point to look for. And second would be how he manages his people well, or whatever the staff strength he has, what kind of I would say orientation he's been having with those people. Are people ready to listen to him as a leader, and are they able to execute well as per the top management's vision and mission. So I think these two are critical part. If you can attract good talent under you, then I think half of your problem is taken care of. Then the third part is the funding side. If you can get some of the blue chips of the blue chips name who are here to stay in terms of supporting the businesses for a longer period of time, and have the orientation of long term, then I think all three things coming together: good promoter, good talent, and good investor, then the company can go do wonders.
Okay, Mahesh has another question. China has managed this virus quite well. Is there a reason to hope that India can do the same? What are FII saying? Also, giving the total data on corona, are we over panicking? Of course, there is an issue, damage caused by another known disease. Okay, so I think the China parallel and what are FIIs? I think everyone's going back to that a little
Yeah.
bit.
No, I think, see, China, whatever data is coming out, we don't know the real data. So please excuse me for that. But whatever I hear from my friends who are in our JV partners, Schroders Asset Management, what they say that things have come back to some kind of normalcy. Obviously, there is lot of tracking and tagging happening in China. So they are still not allowing huge crowds to gather. Even in malls, there is a social distancing which is being told. Even in cinemas, the occupancy rates are not 100%. I think the occupancy rates are only 20-25%. So it has been forced upon not to take so many people in one cinema hall. So obviously, they are also fearing the risk of in case if this virus again mutate and comes back. So to that extent, China has really done very well in terms of controlling the mess. Maybe in 3 to 6 months, you will really get to know whether China has come out 100%, or it was just an eyewash to show the world that we are open for business. So I think let's wait for 1 or 2 months and get a better picture on China.
Okay. As far as sovereign funds and pension funds are concerned, do you see them reshuffling their allocations to public markets? And I'm asking this also because, a lot of the large endowment pension funds also are LPs in venture capital and private equity
Yeah.
funds, right? So
Yeah.
just for the interest of our listeners and investors, how should we track and monitor that? What are some of the trends that you're seeing in that space, Jinesh?
See, I think sovereign funds, then it depends on from which region they are coming. So
Hmm.
let's take what we heard was the Middle East based sovereign funds had panicked in between because of the oil price crash. The governments had forced them to take out some cash from across the globe, and so most of the ETF redemptions, what we heard in US was because of this, some of these Nordic based funds or Saudi based funds had taken out some money because of their issues related to oil. So I think it is too early to say that have they exited the market or have they come into the market. I think different pension funds will behave differently, but at this juncture, given the importance of cash to be remaining at their hand, I'm sure even the best of the best sovereign funds will be slow in committing lots of money to any markets as of now.
All right. And do you track pension and endowment funds at all, Jinesh? Does that fall under your
Mm,
radar?
So not much, to be very
Okay.
frank,
All right.
and we don't get very authentic data unless we get only data which is like
Publicly available. Yeah.
yeah.
Okay. All right. There was a question on is it better to deploy in bullets over the next 6 to 12 weeks rather than a SIP over the next 3 years
Yeah.
if one has the liquidity?
Yeah. So
Abhishek, I
we
hope you have the
what
liquidity.
yeah, so good if you have the liquidity, and I think what we are saying, do daily SIP for next 2 months.
Daily SIP for how long?
Daily SIP for next 2 months if you want to.
Okay. All right. That's an interesting way to not want to time the market, right? Because there's no way you're going to be able to catch the bottom, right?
Sure.
Okay. Okay. So I think we've covered most of the questions that were sent in on email, as well as folks that have been typing them in here. I'm just going to open it up to all of you if there's anything that you want to directly ask Jinesh. I think we have another 5 to 6 minutes. If you want to just unmute and ask Jinesh, please go ahead and do that. If there's anything that you feel we haven't covered or we missed any of your questions.
Thanks, Jinesh and Saina. This is Mahesh. Actually, this job situation is looking quite grimy. There are at least hundreds of people approaching us on LinkedIn asking about what about internships, jobs. All that is there a view on that?
No, I think
It
see
might not be related. Sorry if it's not related to this forum, but is this something worth touching upon? Yeah.
no, I
Yes.
think see there is a fear, there is a scare around that what will happen to the jobs if this issue is not resolved in 2 months time or 3 months time. So hence, if you really see, even Prime Minister Modi had in some of the tweets had told that I would urge all the companies not to go for a massive job layoffs or not to cut salaries. So I think, see, these are unprecedented times. Nobody knows the impact. Nobody knows how it will come out of it. We just hope and pray that the way government is taking decisions on the healthcare side, and the if we ourselves apply self-discipline and quarantine ourselves at home, then I think we can come out of this mess without hurting the economy that much. So when we were talking to some of the big bankers like HDFC Bank or even Axis Bank, our parent company, I think everyone is on a wait and watch mode. People are just waiting how these things unravels by 31st of May. If uh, things subside, if there is a case in point that economy is going to open up by June slowly, steadily, then people will absorb uh, 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 people will not go for job losses, or people will not layoffs, and I think things will come back to normal in 6 months time. But obviously, as of now, there is a lot of scare. People don't know how to react to some of this case. In fact, we as a fund manager or as a head of equity also, we are learning every day something new. So I think it's a testing time. It's a difficult time, but we have to live with it.
All right. Okay, just one last question. I think we have time to take it. I don't know whether you can comment specifically on another fund, Jinesh, but I think the question is on a positive note, once the recovery cycle starts, what is your take on US based mutual funds and will they lead the recovery or not this time?
No, I think every time US has come out of the problems, so I don't see a reason that why US will not come out of this problem. Obviously, it might take some time, but there are some of the great companies in US who will again become bigger and bigger day by day. So obviously, if you have that appetite of putting money, then I think I'm sure you should put some money in US based funds also.
Especially someone with exposure to Zoom. Right. Okay, I think we're running out of time. Quickly, just a hot takes, Jinesh, for the last few questions that are coming in. Do you just want? Sorry, do you expect the RBI to start printing additional currency notes, and what impact will that have?
See, I think at this juncture, I think RBI is doing it very smartly. They are not opening up all the ammunition at one go. So they are, as of now, using public sector banks and private sector banks to help manage the liquidity part in the system. If, let's say, things go further bad, then obviously they will have to go for a significant stimulus, which might lead to printing of currency. Uh, which is in a way not good, because yeah, then your rating downgrades can come from S&P or Moody's of the world. Normally, you don't want those things to happen, but given unprecedented times, means if Germany can take these measures, why not we?
Okay, so I think we are at the end of our time. Thank you very much. So just, a couple of things that stood out for me. You started by saying, Janesh, that make volatility your friend. Right? I think that was one of your first few sentences. I think we must all live by that. It's going to be a difficult time. No one can really call what's going to happen. The other thing that you said was look at a 50-50 public and private market allocation. That was something else that stood out for me. And the third thing that you've said is that do a daily SIP. If you have the liquidity, you must do that. Anything else as your closing thoughts, Janesh?
No, I think, see, all this type of events come and go. Maybe in hindsight, after 3 years, we'll feel that this was the best opportunity to invest, be it private or public. So I would really urge people not to get very negative at this times. And if you have decent liquidity at play, then start investing slowly. I'm not giving a sales speech, but I'm just saying that there are many events which have come and go, and there are some of the enterprises which have kept on delivering in terms of returns. So please keep investing slowly, steadily, but uh, uh, on a longer term basis.
All right. It's not a sales pitch, Janesh. You're on the Silver Linings Playbook. It's something that we must live by. Thank you
Yeah.
very much, Janesh, for making
Thank
the
you. Thank
time
you.
and for
Pleasure.
your patience and for all of your insights. Thank you, everyone, for joining us today. And please feel free. You have an open line of communication with us. I think most of you all will have my email address. Please feel free to write to me. Please give us your feedback. Let us know what more we can offer you and talk to you about. We are actually doing this in your interest and ours.
Thank you.
Thanks a lot, guys. Thank you, everyone.